Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 843A, and today's date is December 15th, 2015, and the title of the episode is We Are Now Seeing Economic Warning Signs All Around Us, Indicating the Economic Collapse. Let's get right into the economic collapse financial news. Now, we're going to head out to Greece, and at this point, we realize that Greece has lost its sovereignty completely. They're using Greece as a guinea pig. Greece has collapsed. No matter which way you look at it, they need more and more debt to survive. They made a deal where they're going to be selling off assets of their country, and it has already started. Greece right now has signed its first major privatization deal, granting control over dozens of regional airports to a German company. The German firm could operate a cluster of airports, including some of them on popular tourist islands. Greece's two biggest unions, the GSEE and the ADEDY, have already called on workers to rally in central Athens against the so-called austerity measures. And we're going to see bits and slices and pieces of Greece being ripped away from the people and sold to private corporations, to central banks, to creditors. And this is what the central bankers want. They want the real assets. They don't want the paper money with the ink on it. They use that to steal the wealth from the people. That's how it works. That's why they don't create all this money and put it in their own bank account. They don't want it. They want the precious metals. They want the land. They want the ports. They want anything that they can get their hands on that is physical and it is a real asset. The paper, the ink, that's just created out of thin air. Anybody can do that. Now, out in Italy, we are seeing one of the first bail-ins. The Italian banks are in serious, serious trouble. And there are 4 banks that basically are imploding on itself. And what they had to do to keep these banks afloat, they had to do bail-ins. And an Italian pensioner committed suicide over this week. He hung himself after the Italian government rescued the small 4 banks and basically wiped out his life savings. The bailout, or we should say bail-in, was carried out under the principles which governed Cyprus's bailout, which is really a bail-in. All the stakeholders in the bank, including depositors, were at risk in the bank's failure. At this point, 18% of all outstanding loans in Italy are non-performing. That is an extraordinary high level, particularly when you consider that Italy is the 8th largest economy in the world and the 4th in Europe. So if we look at this circumstance that occurred in Italy, where they had to save these banks, they went inside the bank, they took the people's money and left them with paper, which is worthless, which is the bank stock. And the pensioners, at least one of them, said, this is ridiculous. I can't go on. I can't live like this. And what we're seeing is this is going to spread across the world. This is just a small glimpse into what is happening at this point. Can you imagine when this economy, and it's going to happen, completely crashes and falls apart, and they start the bail-in process? Now, for those people who think, oh no, the bail-ins are not going to happen, remember, back in 2012, in November, they created the first bail-in document. The FDIC and Bank of England created it. In 2013, in the beginning of that year, Cyprus had a bail-in. And then after that period, we see Europe, Switzerland, Canada, New Zealand, and many other countries adopt the bail-in document. This is all they have left because most of the governments right now will not allow a bailout. So the only place they can get this currency is to go into the accounts. This is why Christine Lagarde, director of the IMF, is saying they need a 10% wealth tax to pay off this debt. The only way to save their system is to rob and steal from the people. And they will do it. If they don't get their way with the wealth tax, the carbon tax, or any other tax that they have planned, they're coming directly at you and they will take whatever you have. Now, here in the United States, they're trying to keep this illusion alive that we're in a recovery, but it is really falling apart. It's becoming more and more difficult as time goes on. We see the Empire Fed manufacturing. It beat expectations, and I know out in the corporate media they're saying, whoa, look, it beat expectations. But when you go from -7, which was expected, to -4.6, I don't think this is actually good. They're in the negative range. And what we're looking at is that Empire Manufacturing has contracted for 5 straight months in a row. Employment has tumbled to 6-year lows, and we haven't seen anything like this since 2009. Now, this entire system is falling apart, and the Baltic Dry Index is continually falling. And during this time of year, we rarely see this, especially when we're almost at full employment, especially when the central bank is looking to raise rates when they're telling us that we're in a recovery. It makes no sense at this point, and it has fallen to 484, down another 24 points. And this is causing a huge, huge problem for the dry bulk shipping companies. I mean, the dry bulk market, they're caught between a rock and a hard place at the moment. As the world's economy growth is lower than they anticipated, it is really hurting demand. Ship owners of larger bulkers like capsizes could soon opt to lay up part of their fleet or even scrap some vessels of just 15 years old, because what do? There's no demand right now. And when they look at the entire bulk shipping market, they're saying there's no credible anticipation of the market rebounding at any time. So this is a huge, huge problem. And this is spreading to the trucking industry, spreading to the rail industry, and after this holiday season, everything is going to accelerate. Layoffs, store closings, housing still on the market. Everything is coming to a screeching halt. And within the past few days, we have seen 3 major high-yield funds that have completely imploded. And panic is spreading rapidly all over Wall Street. Funds run by Third Avenue Management, Stone Lion Capital Partners, they have suspended payments to investors. And a fund run by Lucidus Capital Partners has liquidated its entire portfolio. Right now, we are witnessing a race for the exits. We haven't seen anything like this since 2008. And those people who are not running, they are going to be completely wiped out. Scott Mernard, from Global Chief Investment Officer at the Guggenheim Partners, predicts 10% to 15% of junk bond funds may face high withdrawals as more investors worry about getting their money back. And we're seeing a lot of people are talking about this. James Rickards is out there saying the Fed is on the brink of committing a historic blunder that may rank with the mistakes made in 1927 and 1929. They are raising interest rates into weakness. He says they will likely cause a recession. Well, we are already in a depression. We are already there. Once they raise these rates, the entire system is going to start to crumble. We're most likely going to see the housing market start to falter. As interest rates move up, it's going to kick a lot of people out of the market. They will not be able to purchase a house. So we'll see that start to slide. We'll see the free money start to dry up. We'll see banks, their stock buyback will start to slow. We're going to see this completely spread all over the place. Will it happen a split second after they do it? No, it will take some time. And they're betting on this. They're hoping that they can string this out to get ready for this event where they can blame this entire system collapsing on somebody else because they don't want to be blamed for this. And we are seeing many warning signs right now. The warning signs of this next correction have now clearly manifested, but they are being skillfully covered up, trivialized by the financial institutions. I mean, we mentioned the Baltic Dry Index, and we know this is a measure of shipping rates and a barometer for worldwide commodity demand. It recently fell to its lowest level since 1985. This index clearly portrays the dramatic decrease in global trade and forebodes a worldwide recession. We're also seeing a slowdown in global growth, and this is the CRB index, which measures 19 commodities. After a slight recovery in 2011, it has now dropped below the 2009 level. Nominal GDP growth for the third quarter of 2015 was just 2.7%. The problem is, Yellen wants to begin raising rates at a time when this nominal GDP is signaling deflation and recession. The last time the Fed began a rate hike was the second quarter of 2004. But back then, GDP was around 6.6%, and there was less manipulation at that time. The last several times the Fed began to raise interest rates, the GDP ranged around 5 to 7%. Again, they're doing this into weakness. The total business inventories to sales ratio shows an ominous overhang. Sales are declining as inventories are increasing. This has been the hallmark of every previous recession. The U.S. is currently in a manufacturing recession. I mean, November ISM manufacturing index basically entered into contraction for the first time in 36 months. And we're looking at this. We see the Chicago Purchasing Managers Index came in at 48.7 for November, signaling a contraction. The Dallas Fed manufacturing fell to negative 4.9. The Empire State manufacturing, which we just mentioned, it's a complete disaster. The Richmond Fed manufacturing dropped 2 points to negative 3. I mean, we are seeing all the signs that we are headed into this great collapse, this great system that was created by the Founding Fathers, which was taken over by the central banks, which then has been manipulated since 1971 going forward and destroyed the entire United States. We are seeing a total implosion of everything. And we can see right now that the total U.S. public and private debt levels, they have climbed right now to staggering levels of 327% of GDP, which is nearly 600% of the federal tax revenue. So we have basically debt levels and massive capital imbalances, and they set up the stock market for its third major collapse since 2000. And this entire system is going to basically collapse right in front of our eyes. We are seeing all the signs. It's building up. We've seen this back in 2008, 2001, 1929, and it is happening right now. And it's going to accelerate after this year ends, going into next year. And if the Fed goes ahead and increases the interest rates, this game is over. And they're basically telling everyone, yes, this game is over. We are now ready to shut this down. Everything's prepared. Everything is ready. And they're just ready. They're just waiting there to go forward with it. That's it. And while this is happening, everything is flowing from the west to the east. Russia has completed their payment system. the Russian Central Bank and the National System of Payment Cards, the NSPC, have announced the launch of the first cards of the Mir payment system by 7 Russian banks. The second group of 21 banks are going to pilot project, and they are already starting testing the cards and plans to complete it before the end of 2015. The following year, the banks will start disclosing their network, and they'll start issuing the cards. So we can see at this point that as this economy completely implodes on itself, we've been watching all the economic indicators. We've been studying them. We've been pointing them out. We've been showing how all these statistical numbers have been manipulated to make us believe we're in a recovery. And now a lot of people are starting to wake up and say, okay, what is happening here? A lot of people are going to wake up a little too late, and they're going to say, what just happened here? No matter what, this system is crumbling and falling apart. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.